Well, good day, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for August 30th. It's hard for me to say that we're leaving August, but we are. One more day. August 30th, 2023, 6:05 p.m. Central Time. Infliction. Oh, I didn't say infection. I said infliction, because that's what we hit this week. We hit an inflection point, and that point came when the JOLTS data came out at, 8.6 million jobs. Whoa. Remember, we were at 12 million wanted in 2021, and here we've gotten, a third of them, no longer those ads out there. People have been hired. And that changes everything, because people are now seeing they can't get the wage increases they want. But that's not really true. What do I mean by that? Okay, let me think this through. The auto workers want a 46% increase in pay, and they want to work 32 hours. UPS workers are going to get $180,000 to drive the truck. I just saw in Chicago that the United Airlines, there was a picket today. The workers want more money, so they're preparing to go with that. Am I wrong? Are the screenwriters and the actors all out on strike? They are. Am I wrong that even in Australia, in natural gas, the three companies can't seem to get everything together, and we're going to know in just days? Do they go on strike, and what does that mean? I do. We're still talking that when we get to Friday's jobs report and tomorrow's PCE income expenditure report, that we're still looking at 3% or so increases, maybe 4% increases in wages. There is still inflation here, is my point. It is goods inflation that we're all concerned about to a large degree too, because if inflation outstrips it, you're in trouble. Remember, I'm giving you a discount. This is not inflationary. This is 40% off. My Labor Day sale on my research, charting courses. How do you get it? You go to our website, iraepstein.com, or you move your cursor up here. And on our website, I'll just take you there for a second. When you go there, this is how the page looks. You can either click up at the research or the education area. It's all explained in there as well. You're not going to get that 40% again. I've made up my mind. That's over. So this is the best deal you're going to get from me. Remember, I said it. And remember, I'm saying something else. I'm going to raise prices. Everybody else says, why haven't I? So you want the deal? This is it before the prices go up. So if I offer a 30% off another time, it's off a higher price. This is your deal time. Goes off very shortly. That's it. Okay. So let's talk about where I'm at in all this and how this is going to work for people. Here's what I think. I think that the market is caught right now. Like I said, inflection. It's going to look tomorrow to see the income expenditure numbers. It'll be all enamored with the jobs data where they're looking. I still believe the number is 170. I've heard 175,000. It'll tighten down tomorrow. I'll hear it on Bloomberg and CNBC what the newest estimates are. But the 170 is where we started the week off. Wage inflation, they were talking 3%, 0.3% over the 0.4 that they had. So those are the things I start looking at. The Fed will look at that and see, okay, if those numbers come in that we're getting in creating fewer jobs and that the price pressure for wages is slipping, those are good things, and that makes the Fed probably go. And other than PPI and CPI, which are coming up, you can check that off. The Fed goes into a pause. Then we go to those other numbers to see do they go with it, and that's where we're at. Now, the stock market has rallied back so dramatically that we may finish off August with a flat market. It's hard to tell. You can't tell yet because you've got one more day of trade and you got a series of reports tomorrow. So keep that in the back of your mind. Keep in the back of your mind that Saudi Arabia is already putting out there they're going to keep their production cut going right on through now October. So they're supporting that. I still think that bonds and notes, I'm not ready to say that they're ready to go up from here. I'm not into that camp at all yet. Could be, not there yet. Dollar down hard, as you can see, against all these markets. So where are we? Well, obviously, we're looking at a market on a weekly chart that is up for the week 2.52%. But look at how this market is cut into this whole loss factor that we had. That's rather impressive. Now, the weakest month of the year is September. It doesn't have to be. Nobody has stamped it and said, oh, it has to be a down month. That is not what it's saying. It is saying that when you look at all the months of the year, it is the month most likely to have a negative to it. So if the other months are strong, this is weaker. If the other months are down, this is even weaker than that. That's the way you want to look at it, but it's often a net loss month, period. That doesn't mean it has to be. If history repeated itself over and over all the time, what do you need any of us for? Just follow history. When you're looking at the Dow, you can see you've gotten about a 50% retracement. So you started off up here. You can't deny that, okay, 4,600. You're back to 4,525. You're about 75 points down from where you began the month. And yes, you can make that up tomorrow. We've seen that. You've cut the loss in half. That's the way to look at it. You've got higher lows, higher highs on the chart. The market is over the 18-day average. You know, I was just doing today my swing lines for my new charting course. I haven't redone this course in a bunch of years, so I'm going to do it now. I'm actually redoing it. And often, if people get my older course, let's say in the past year, I don't go back and give a legacy forever. And when I do a new one, I'll give them a pretty good discount on the new one too. And as I told you just now, I'm raising prices on everything. So this course is $400. I'll probably go to $500 on it, just to give you an idea. And then when I do the new one, I'll make sure that you get a discount. Don't buy the old one. Okay, you'll be paying on the new one. Higher lows, higher highs, that's if you want my stuff. And where's the resistance? 45.53, 45.54, the upper Bollinger Band. So if you get a bounce tomorrow, be a nice way to finish the month, but you'll be down. If my numbers are right, and they certainly look that way, I don't expect you're going to just blast through that Bollinger Band and run. Could you? You could. Obviously, there's no magic there. But 95% of the time, you don't stay over that number, and you're overbought going into it. When I look at the NASDAQ, same thing. Momentum's overbought. You're right into the resistance point. You started off higher in this area. All righty. So you've come back to about where you were. Well, what's carrying this market stronger than the others? Let me think of the words. NVIDIA. That's what's carrying the market, all right? Everybody loves NVIDIA. When you come to the Dow, you are up here, right up in this zone, right through here. And you're certainly well off that high. It doesn't have a lot of tech, all right? Could it rally more? Of course. It's not as overbought as the other markets, by the way. So little bitty non-tech is getting a nice little ride, but not bullish. It's the setup here on the Russell's a lower and low, higher high. I feel great that I told you. I don't believe you sell the first challenge into the 100 and the 200-day average. And I said that the same in the Dow. They both did it in the Bollinger Band, and bingo. I feel good about it. Did my job. Now, in the bond market, you're already overbought. Could you rally to 123.2? There's nothing that says you can't. Nothing says you can't go up here on the chart, but the probability, well, you're already overbought. It's going to be hanging in on tomorrow's income expenditure numbers, the PCE parts, and then, of course, it's going to look at the jobs report. And every day it's thinning out. More and more people are going away for the rest of the week, taking it off. I'm going out to dinner again tonight. I think I've gone out every day this week to dinner. I never do that. It's the end of the summer. I'm enjoying myself. By the way, today Chicago is a taste of fall. We were in the 60s during the daytime. That was cool, and it was a wake-up call. We're going to be in the 90s over the weekend, 95 without heat index. So gives you an idea. You're at that time of the year where you do one of these things. In the 5-year note, no, the market's still looking like there's short covering going on. I don't think it's going up here. I think it's going to flatten out and hang around that 18-day average for a bit. In the dollar index, look, you got hit. You could fall right into all this number if you get something tomorrow that comes out in the report or Friday, and it hurts the dollar. What would hurt the dollar? Obviously, a weak jobs report. Oh, that means the Fed doesn't have to keep rates this high. That will hurt the dollar right away. In the euro, it's the flip-flop. All right, euro's on the bent where I don't see how they can't raise interest rates. Same goes for the Bank of England. So I think both of those areas get this going, and that's why I think you've come alive, and I think they're in uptrends, and they could go to their upper Bollinger Band. Just the opposite story. In Bitcoin, so it was a one-day event. That doesn't make sense. I saw the interview with the Grayscale CEO today, and he's won the day at this point. He may have won the battle. I don't see how the SEC wins this war with them. I'm not smart enough. I'm not an attorney. I did go to law school, by the way. I'm not an attorney, though. And I'm certainly not as smart as the SEC chair who thinks that he had his argument. I happen to think you're going to get these ETFs on Bitcoin and some of the others that are going to come out. They'll be highly scrutinized. I welcome it. Remember what I told you about crypto when they came out? It reminded me of the days in the 60s and 70s. I began my first day in futures was 1969. I was in law school in Chicago. I looked at a board, became a runner. I don't even know if you know what that was, but you had to run the orders into the old trade pits. And that is what I did, and it changed my whole life. I had never seen anything like this. And it just was amazing. But that's how you learned in those days. Well, my point is, it was cowboy land. It wasn't this way. To this day, I don't believe Hillary Clinton ever put up X amount of dollars and made all that money legit. End of discussion. I've done this all my life. Ha! All right. In the Brent crude market taking off to the upside, going with that, away you go there. All right. Fighting, yes. Sideways action could have a market goes for the highs because it's trying to be manipulated again. Gasoline prices, well, will they get a bid off of what the hurricane that just went through, and it's still going through the South? Well, you're going to have to replenish gasoline wherever you can, but the first thing that happens is nobody's driving. So that hurts the market at first, and afterwards you go, oh, wait a minute. All these gas stations are out. People ran. I lived in Florida. They run when these things come. If they're smart, they run. You don't say, I can weather this one out. Not a Cat 3, Cat 4. And if you looked at it, you see the damage. Well, you're just going to wake up to it. Now it's going to go through Georgia, then up the coastline. It's got a lot to do. And natural gas, well, is nat gas going to come alive in large part off of what Australia does? Keep your eye on that. There's many things that work in nat gas. I'm also understanding some of the newest platforms and rigs that are being built right now want more money. And they're already going what they call transfer fees and all that. So be careful. This market's acting bullish, not bearish. Until it gets back under here, I see the momentum up, the trend up, the bias up. I wouldn't be surprised that you try to make a run there. So I'm Ira Epstein. I hope you take advantage of the sale that we have here. You won't have me to beat around on that much longer. I won't be doing it over the weekend's it, and it's done. You don't have it next week. Take advantage now. You have a good day.